Welcome back to Switzer on Australia's Business Channel. Beware journalists and newspapers trying to spook you with housing collapse talk. Great newspaper though it has been, the AFR's preoccupation with housing bubbles is bordering on the manic. That said, I'm always open to be convinced by someone who has an insight I don't have. So let's look at the Finn's story entitled House Prices Enter Danger Zone. The big worry seems to be that average house prices are 4.4 times household disposable income. But this ratio was 4.5 in 2006 and 2010. And after these years, the house price fall was, wait for it, 6%. The smallness of this fall makes me think it should be delivered by Dr. Evil from Austin Powers. Nationally, the rise in house prices is 9%, but for Sydney, it's up 14% this year. And if we want to exaggerate, we could annualise monthly increases to 20%. But the actual increase is 14%. But mortgage repayments have been steady for 12 years, and this even includes the troubled years of 2006 and 2012. At the moment, only Sydney's prices are rising quickly, but average rises for a decade were only 2.5% per annum. So this is a city in catch-up mode. AMP Shane Oliver is not worried about a housing bubble, and understanding numbers is his full-time job. And Louis Christopher, who eats and sleeps property prices at SQM, thinks prices are 3 to 4% overvalued. I know we use negative stories to sell newspapers, but the housing story is a positive one when our mining sector is going off the boil and we are trying to get consumers spending and businesses investing. One day I might change my mind on the housing bubble talk, but for the moment, all we have is a housing recovery, and we should be happy about that. But that's a good news story, and we in the media aren't used to dealing with those sorts of things. Well, with all this housing bubble talk around, what does John McGrath, the Chief Executive at McGrath Estate Agents, say about all of this media spooking up of this issue? And what is he seeing around the country? How big are the Chinese buyers? And where are the best places to buy right now? John joins me in the studio. John, how are you, mate?
Hey, Peter, good.
I was worried that you might yell, oh, that's a lot of rubbish when I was hearing my comment.
You keep going all night, Arlo. I think it's very true. I mean, we do. I hear this every housing recovery, and about every 7 to 10 years I hear people saying Sydney's going to drop 30 to 40%, it's overheated, and it just simply isn't the case. As you mentioned before, in the GFC, you know, the greatest tragedy economically for the last 100 years, at worst we dropped 12%. Yeah. Now, other parts of the world drop 40 and 50%. We dropped 12, and we're now back up above those figures. Sydney is a very robust international market. I know we're going to talk about the international buyers soon, but I think we are in recovery mode. And this afternoon, I just coincidentally happened to be in a meeting with the guy I think is probably the savviest residential investor. He's been investing for 40 years, out of Melbourne, focuses on East Coast. I said to him, what do you think the market's got? He said, it's got 15% to run. And he focuses on these figures very much.
Yep. So 15% to run, that means it would have if it was all done in 1 year, might not, John, could be over 2 years, couldn't it, 15%?
No, could be 3.
Could be 3. Yeah. So this first year you think is going to be the biggest rise, and it's going to start petering out a bit, but still rising.
Correct. And as you said, Peter, before in your comments, I mean, we are in catch-up mode. Yeah. Typically we see the market go 5 to 7 or 8% each year. We haven't seen that for 4 or 5 years. So this is really just catch-up. Now, I actually do agree, if this year was as strong as last year, for example, we saw another 15%, I would be starting to join the queue of saying it's getting a bit hot. Yeah. But right now, if we see what I expect to be a 5 to 10% increase in Sydney prices, for example, I think that that's sustainable. And as my client this afternoon, the investor was saying, he sees 15% this cycle to go. So that could be 5% for the next 3 years, and I think that's very sustainable for an international city of Sydney standing. I think it's very sustainable.
I think I asked Frank Gilbert from BI Shrapnel, and I think I said to him, asked him, have we had, and you probably remember, have we had years where we've gone up by like 15 or 20% for a couple or 3 years in a row? I'm sure he said, yes, we have.
I think we've certainly had double-digit rises for a couple of years that I can remember over the last couple of property booms.
And you didn't get a collapse after it?
No, we
didn't. That's the point I was trying to say.
I said to someone the other day, I see a slowdown, not a go-down. I don't see prices going south of where they are, but I see them rising at a lower and more sensible in terms of longer term. And I don't say sensible that we didn't deserve a catch-up, but I think long-term you can't have 15% year-on-year for long. Otherwise we start going into danger territory.
Yeah, I think you were quoted in the Fin Review story saying that you've noticed that some buyers have dropped out of the market because the rise was too rapid.
Yeah, I'm starting to hear people saying to me, look, we're just going to sit on the sidelines for a little while. We've been beaten at 3 or 4 auctions. We're starting to think, you know, we're just going to see what's going to happen. I think when enough people say that, that's got a self-fulfilling feeling about it, and I think that will be a part of the slowdown. But, you know, if we go from 15% or 14% this year to 7 or 8% next year going forward, I think that's still a good time to be in property, you know, because it's still going to keep going for the next few years.
Well, there's a very interesting piece of data out today, John, which I know if you saw, but wages growth is now the weakest in 17 years. And that's going to be a natural break on people enthusiastically bidding at auctions as well, won't it?
Oh, yeah, it will. But, of course, the property market is a cocktail of a whole range of things. And, you know, there's unemployment is an important figure to keep an eye on, wages growth and disposable household income. But also the affordability of loans. I mean, this is the cheapest money we've ever had in our history. So even though some things are going up, some things are coming down, and you can lock in very attractive. I heard 4.5% 3 years the other day. Someone was talking about a loan you can.
It's a great result.
That's fantastic. So from a buyer or an investor out there, there is a lot of good news. So even though prices have gone up a bit, affordability I think is not any different to where it was.
Yep. Okay, you've got a chart here, and that basically gives us a snapshot around the country. Before it comes up, but why don't we just talk about it? You've got Sydney at 14.1%, I said 14%, and the median price is about 610K. Yeah. Is that surprisingly big for you, John, knowing Sydney's size?
Not really. I mean, there's 172 suburbs within Sydney that have got $1 million median price range. But, you know, Sydney is the New York of Australia, and Melbourne's certainly not far behind it in terms of the depth of wealth and the business that goes on here. Yeah. I mean, this is a very serious real estate city. Yeah. So I'm not surprised at 600,000 median price. It doesn't overly, you know, the way things are going globally, it doesn't overly surprise me.
Melbourne's 9.9, but I'm reading that it is going off the boil, its rises. Are you seeing that?
Yeah, look, Sydney is leading Australia by a fair margin. Melbourne is good, Perth is good, but they're not as strong.
And Brisbane, which I think you've said it has potential, it's not kicking up at this moment, is it?
It's not yet. That's where you make your money. Next 3 years, if you said, I've got X dollars to put in somewhere, the best yield you'll get will be Brisbane and southeast Queensland, in my view. Yeah. It hasn't had any increase yet. We've seen a plateauing, a stabilisation, but that's where I think you'll make money. And a lot of it will be people moving from the wealthier, more expensive cities south, Melbourne and Sydney, going for a better lifestyle or more affordable lifestyle.
Does Adelaide have potential in that respect? It's a 3.1% rise now. Do people eventually go there when Melbourne and Sydney are expensive?
I think so, but you know, it might sound silly, but I think you've got things like the climate factor. A lot of people are looking for warmer environments as opposed to colder. You look at not only South Australia, but Tasmania, Hobart and Launceston have had a terrible run, and I know there's some economic issues wrapped around that. But I think that people, you know, there was that well-worn path of people going north to Queensland before the GFC. Yeah. I expect that to be resumed.
Yep. Chinese buyers. Now, a lot of people say a lot of this 14% is coming from the Chinese buyer. John, what's your view?
The Chinese buyers in terms of Sydney are focused on 10 areas, 10 suburbs, and they're very strong in those suburbs. They are dominant. In fact, I had a meeting this morning with one of my team, and he said he had 128 groups through a property last week on the mid-north shore of Sydney. 123 were Chinese or Asian. So it's real that there is a demand from the Asian nations, particularly China, for Sydney property right now, but it is very much contained. So when people say, well, it's a part of the property boom, it's not really. If you look at it as a material number, it's only a few percent. So compared to...
It's just half of those people who want to go in those particular suburbs.
It's become, you know, for a lot of people looking to buy in areas like Chatswood or Burwood or Hurstville in Sydney, which are very popular for those markets, it's really become very, very difficult. I agree with that. But elsewhere, you know, they're really out of all the suburbs in Australia, and particularly Sydney, there's only 10 here that are popular.
So they're not really making life hard for first-home buyers unless they're first-home buyers with a real lot of money in their pocket.
Exactly right. Having said that, though, Pete, that about 15% of the new properties last year off the plan and brand new properties actually did go to Chinese buyers in New South Wales. So that is starting to creep up as a material number. That's partially because, of course, they're allowed to buy without approval, those properties, not having to go through FIRB approval. So,
because they're new.
Yeah, correct. So I think there's a little bit of media hype around this, and then that creates fear amongst the local marketplace. I think it's exaggerated. I think it's healthy for us to have an international buying community looking at Australia as a safe place to invest.
Okay. Queensland, there's a ban on price guides. What's your view on that?
Oh, look, I think it's crazy, and I've been trying to lobby the government for them to see the insanity. What's actually happening? They're trying to stop people auctioning properties and presenting to the market any discussion on price. Now, as you and I both know, price is the number one thing that people need, because you can change area, you can go from a house to a unit, from one suburb to the next, but at the end of the day you've got a price limit. So you need to know what something's likely to sell for. Yep. The Queensland Government, because they're concerned about misleading price quotes, which I'm also concerned about, but I don't think this is the way to fix it, they're saying, well, if we stop people talking about price, they can't mislead anyone. My view is just get rid of the people and ban the people that are misleading, and let those that are telling people with integrity what things are worth, because that's what people want. They want information.
Is the Real Estate Institute backing you on that?
No, the Real Estate Institute's in the same court as the Queensland Government,
Gee.
surprisingly. So, look, that's concerning, I think, especially for Queenslanders, but hopefully they'll see the light, and they are listening to the arguments, so hopefully they might reverse their decision.
Well, as a property buyer, I always wanted the price guide, even though I didn't necessarily believe you. The thing is this, I wanted to hear what you guys had to say, because you're in the market, and sometimes you just guess wrong, don't you?
And have a discussion.
Yeah.
I mean, as long as you can talk to the agent about it and question them and challenge them, you're in the right place.
Yeah, I'm with you on that one, mate. Thanks for joining us on the program. Okay, so after the break, we're going to be talking to Michael Heffernan, the legendary stockbroker, on the 5 stocks he likes right now.